Assalamualaikum warahmatullahi wabarakatuh. My name is Imran Shah bin Rusdi. Today we would like to present to you about current issue of Islamic banking operation and their solution in lending process. Before that, I would like to introduce my member. First, Umar Al-faris, Ahmad Naim, Putera Ajarul Amzar, Muhammad Amar Hakim, Qiyaumin, and lastly myself. I will present about introduction. Islamic banking is a banking system that operates in compliance with Sharia law or Sharia. In contrast to conventional banking, Islamic banking prohibits interest or usury in transaction and instead encourage equitable sharing of profit and risk between the lender and the borrower. The lending process is a critical aspect of the functioning of Islamic bank and a fundamental source of income for this institution. However, Islamic banking operation need to ensure compliance with the principle of Sharia law, which prohibit charging or paying interest, or engaging in speculative or unethical transaction. As a result, Islamic banking have developed innovative lending techniques such as profit and loss sharing arrangement, where the bank and the borrower share the profit and loss from a business venture. The lending process in Islamic banking operates under a set of principles that prioritize fairness, transparency, and ethical behavior. By adhering to this value, Islamic banks are able to provide a valuable alternative to traditional lending institutions while fostering economic development and social responsibility. Then I will pass to the next presenter.
Assalamualaikum, my name is Umar Al-faris bin Muhammad Noor. Next is issue related to lending process. Lending is a crucial aspect of the business in the Islamic banking system. The procedure is giving money to people, companies or organizations for a variety of reasons, including buying a house, beginning a company or growing an existing one. However, because Islamic banking adheres to Sharia law, it differs from the conventional banking in terms of the lending process. Risk-sharing is the foundation of Islamic banking, which means that both the lender and the borrower share the risk of an investment in a particular project or endeavor. Islamic banking bases the loan application procedure on mutually agreed upon term and circumstance that will hold Islamic standard. Even yet, there are a number of problems with the lending process in Islamic banking operation that must be resolved in order to make sure that the process is fair and transparent. Next is lack of awareness. One of the biggest problems with Islamic banking lending is that many potential borrowers are unaware of the fundamental of Islamic banking. Because Islamic banking is still in its infancy, many borrowers are unfamiliar with the law and guidelines that govern it. This ignorance causes misconception and uncertainty concerning the loan procedure. Lack of awareness of Islamic finance guiding principle may be one factor in the lack of perspective on difficulties relating to the lending procedure in Islamic banking. Many individuals might not completely understand the principle of profit and risk sharing that underlie Islamic finance, making it challenging for them to understand how Islamic banking operates when it comes to the lending. Due to a lack of access to accurate information, many people may have misconceptions or a lack of knowledge regarding the lending practice of Islamic banks. In general, a lack of comprehension, education and knowledge of the principle and practice of Islamic finance may be the cause of the challenge with Islamic banking lending procedure. It is crucial for stakeholders to get a deeper grasp of Islamic banking as the sector continues to develop and receive more attention in order to properly comprehend its lending model and potential advantage. Next, I will pass to the next presenter.
Assalamualaikum, my name is Putra Ajur Hamzah Bayadi. I will present about the last issues under lending process. The last issues is risk assessment. Risk assessment is challenging since it is important in Islamic banking to make sure that the lender and borrower are equally at risk of loss. However, determining the risk associated with a project or venture can be difficult because it entails determining the project viability and the borrower capacity to repay the loan. Due to the difficult in assessing risk, decision may be made that result is loss for both the lender and the borrower. In Islamic banking operation, risk assessment play an essential role in the loan process. Numerous risks are associated with the lending process, so it crucial to recognize, evaluate, and reduce this risk to guarantee the stability and success of the bank activities. Certain risks are taken. The factor of risk assessment under lending process issues. We have four the factors. First, credit risk. Two, Sharia compliance risk. Three, operational risk. And for the fourth, market risk. For the credit risk is the chance that the borrower wasn't be able to pay back the loan principal and or interest. The bank must perform a complete credit study and including evaluate the borrower financial situation, credit worthiness, and capacity to repay the loan in order to reduce this risk. For Sharia compliance risk, Islamic banking operation must adhere to Sharia compliance. For the Sharia principle, which forbids specific transactional kind and call for this adoption of particular contract and legal framework. For operational risk is the possibility of mistake, fraud, system breakdown, and others operational problem that could affect the loan application process. Islamic bank must have strong internal control rule and process to guarantee the correctness and integrity of the loan process in order to reduce the risk. Additionally, regular evaluation and audit should be carried out to spot and address any potential operational risk. That are from me. Thank you.
Next up, we will discuss the factors of risk assessment under lending process issues. The first one is crucial aspect is market risk, which encompasses interest rate risk, foreign exchange risk, and liquidity risk. Islamic bank must prioritize efficient risk management policies to minimize this risk. Thorough knowledge of the hazard involved in the lending process is essential for effective risk assessment. Strong rules, process, and controls must be implemented to mitigate this risk. Moreover, Continuous and monitoring, evaluation, and audits are necessary to ensure adherence to Sharia principles and maintain sound risk management practices. Up next is issues under the lending process, specifically focusing on two key challenges. The first concern is the limited product offerings in Islamic banking. Unlike regular bank, Islamic banking will provide a range of financial products to their prohibition on conventional loans. This constraint may pose a barrier for borrowers seeking for more specialized financial solutions. Another challenge lies in non-uniformity of Sharia compliance standard. Islamic institutions now follow varying interpretation of Sharia law, leading to inconsistencies in application. This disparity in compliance can result in miscommunication and conflicts between borrowers and lenders. The limited product alternative in Islamic banking restrict the choices available to customers, while Islamic banking offer Sharia compliant financing options such as Islamic personal finance, Islamic automobile financing, and Islamic house financing. The limited range of product may hinder lending operation. When discussing the limited product offering in Islamic banking, we must consider the potential problem it entails. Firstly, the customer have a few options which may lead to dissatisfaction when their specific financial needs cannot be met adequately. Furthermore, collateral requirement pose a challenge since conventional forms of collateral such as real estate and stocks are not permissible under Islamic banking principle. Finding alternative collateral that adheres to Islamic norms can be difficult for Islamic banks. Lack of uniformity is another concern as Islamic banking products are often tailored to meet customer demands. However, this customization may result in a lack of standardization, making it challenging for banks to expand their operation. Lastly, limited experience in Sharia compliant financing can impact the bank's ability to make informed loan decisions. With this relatively new concept, there may be a shortage of knowledgeable staff, potentially affecting the bank's overall lending practices. Thank you. Pass the next presenter.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Naim. I want to present about the potential included problems in limited product offering. High taxation cost. To maintain adherence to Sharia standards, Islamic banking activity need additional procedures and permission. Higher taxation costs might come from this, which could have an effect on the bank's profitability. All in all, while having fewer product options may present a challenge for Islamic banking, it is crucial to make sure that these products are Sharia compliant and satisfy customer needs. By making research and development investments, expanding their knowledge of Sharia compliant financing, and increasing operational effectiveness to save expenses per transaction, Islamic banks may overcome these difficulties. Under lending process, high cost of credit. Islamic bank operate on the profit loss and sharing principle, which divides investment gains and losses between lenders and borrowers. However, because the lenders is also sharing the investment risk, this principle may result in higher borrowing costs for borrowers. Borrowers may be discouraged from applying for loans for Islamic banks due to the high cost of borrowing, which lower demand for their service overall. Limited liquidity. Compared to conventional bank, Islamic bank may have limited access to cash, which can rise as operational expenses. Higher interest rates may result from this, which may make it harder for borrowers to afford the cost of loans. Riskiest. Islamic banking is based on the idea of risk sharing, whereby the bank and borrowers split the investment risk, because the bank must factor in the potential losses if the investment doesn't produce the anticipated returns. This may lead to higher credit costs. Islamic financial products are more complicated than conventional financial products, resulting in higher administrative expenditures, which also necessitate more through Sharia compliant monitoring and recording. Higher administrative
costs for the bank may result from this, and those costs are frequently transferred to the borrower in the form higher interest rates. Issues under lending process. Larger reserve requirements. Compared to conventional bank, Islamic bank must maintain a larger reserve requirement. This is to guarantee that the bank can pay for any possible losses brought on by risking agreement. However, this requirement might raise operating expenses, which might have an impact on the cost of credit. Absence for conventional benchmark interest rates. Because interest rates are forbidden in Islamic banking, banks are unable to base their rates on them. Islamic bank on the other hand employ a number of techniques to set their rates, which may lead to higher borrowing costs for borrowers. Islamic banking operations high cost of credit is a complicated issue that is impacted by a number of elements, including low liquidity, increased risk, administrative expenses, reserve requirement, and a lack of benchmark interest rates. This issue must be resolved in order to make Islamic banking more accessible to borrowers and guarantee that the cost of borrowing is reasonable and clear to all parties.
Welcome back from our presentations. My name is Jomins. So we have already presented about the issues of lending process. Now I would like to present about the solution to the overall issues of lending process in Islamic banking. So there are a lot of ways to come overs. So the lack of comprehending around the financing procedures in Islamic banking. The first things I would like to mention here is Islamic banking, they should increase their risk management procedures. They need to hire the very expert ones who has much knowledge about both finance and Sharia principles. This can literally help in identifying and reducing low risk process. And the second right here I want to mention is the Islamic bank should improve their credit risk assessments. So they should make investment in technologies and other data sources. By those, they can evaluate the creditworthiness of the potential borrowers using their information. It could be via the payment histories of the consumer or personal and commercial credit ratings and other financial details. Thirdly, Islamic bank, they should face strong internal controls, and they should create the governance system to guarantee obedience to the morals and ethical norms and Sharia principles. The necessities to overcome the problem in the lending process is a comprehensive strategies that include a firm promise to Sharia principles, investment in technologies and data sources, strong internal control and government framework as well. And the last one is a strategic partnership with other institutions. So implementing the risk management framework is a kind of way to get around risk assessments in the loan process in Islamic banking. So all risks connected to the lending operation might include credit risks, market risks, liquidity risks, operational risks, and Sharia compliant risks. Those should be identified, assessed, monitored, and managed as well. So adopting a true risk management strategy, which means Islamic banks, they should create a strategies that address all risk factors, including credit risk, market risk, liquidities, and so on that I mentioned before. So the guidelines for risk identification, assessments, measurements, management, and reportings must be provided under those. Creating sound credit risk scoring models that will take into account the various factors like the borrower's financial histories, the collateral, and the financing Sharia compliance in order for Islamic banks to assess credit risk effectively. So those models should be continually assessed and improved in order to guarantee their efficiencies. So another factor is the routinely assess credit risk exposures. So Islamic bank have to assess the credit risk exposure of their portfolio of finance routinely, because this entails we should keep an eye on the effectiveness of the financings, the collaterals, and the borrower's financial institution, because those can have an impact on the credit risk. And another factor is reducing credit risk exposure through the portfolio diversification and risk sharing. So it is better for Islamic banks to diversify their funding across various industries, origins, and borrower types via syndication or securitizations. The Islamic bank can distribute the credit risks to the additional investor institutions. One of the solutions is conducting market research. Islamic banks should be able to do market research to seek what their current and future customers' needs and wants. They will be better to understand the goods and service that the consumers are now finding out, and they can also see any gap in their current product lines. Another one is creating new goods. Islamic banks may be able to create new products that can address the client demand based on the finding of market research, and they can work together with the professionals and the business leaders to create cutting-edge goods that obey to the Islamic value and that can satisfy the various demand for the clients. And the things that the Islamic banks can do is increasing their lending capability by diversifying their financing sources to increase their liquidities, so they can look at ways to get in other financial market and collaborate with other financial institutions to pull resources. So by applying these strategies, Islamic Bank can extend their operations and they can get around the constraint placed on their product line in order to supply the various consumer demands successfully. For my conclusion, but the issues in the loan process under the Islamic financial institutions, the priorities should be the adoption of the practical solution to the problems that is encountered. So a number of important steps that should be taken into increase the efficiency of the loan process might be including the creation of the Sharia compliance and the standardized process and the use of contemporary technologies and building up the employee capacity and forgings collaboration with set specialists. And by adhering those solutions, Islamic Bank will be improved in the client experience, profitability, and the general growth and development of Islamic banking sectors. So for their lending policies and practice to be stable, effective, and consistent with Islamic principles, what Islamic Bank should do is examining and adapting those policies and practice constantly while they are solving the requirement of their consumers. So I would like to start by saying that things such as institutional, technological, and human capacity building measures are needed to address the lending process problem in Islamic banking. This is a kind of way that will support the expansions, the spreading, and success of Islamic banking operations. That is all from us, and thank you so much for your attention and watching for us.